Do you believe a single company could help build a nation and that the same nation could, in turn, remake that company? It sounds like an exaggeration, but the story of Apple and China is full of surprising turns that make that bold sentence worth exploring. 2 or 3 years ago, the United States passed the CHIPS Act, roughly $52 billion in support for semiconductor manufacturing over 4 years, described at the time as a once-in-a-generation push to rebuild American supply chains. Now contrast that with one company's spending in China. In 2015, Apple reportedly spent about $55 billion in a single year on infrastructure, training, and supply chain investment there. That sum, coming from one company in one country, is enormous. And it helps explain why the Apple-China story is complex, intimate, and geopolitically charged. To understand how we reach that point, we need to go back to Apple's darkest hour. In March 1996, Apple was bleeding cash and close to collapse. Executives scrambled to survive. One senior vice president later described midnight negotiations to sell Apple's last large U.S. factory. Apple was losing about $1 billion a year, laying off thousands, and the sale of that plant marked more than an asset disposal. It was a strategic surrender of in-house mass manufacturing. Apple shifted from making its own hardware to an assembly-oriented model, handing production to outside contractors. Early destinations included South Korea, Taiwan, Mexico, Wales, and the Czech Republic, and ultimately, China. China was not, at first glance, the obvious place for high-tech manufacture. But two things changed everything: active facilitation by the Chinese government and the rise of a key partner, Terry Gou, founder of Foxconn. Foxconn didn't merely see Apple as a client. Gou wanted Apple to train his workforce and engineers in China. The scale of that training, as reported in recent accounts, is staggering. Tens of millions of Chinese workers were trained in various programs linked to Apple suppliers. Some reporting cites figures such as 28 million trained. Apple's own supplier responsibility reporting also documents very large cumulative training numbers across years. Today, Apple directly and indirectly supports millions of jobs in China, numbers that transform a supplier network into something like an industrial ecosystem. Apple didn't just ship blueprints. Apple engineers would sit on supplier factory lines, working side by side with local teams, teaching production methods and quality control. Apple invested hundreds of millions, then billions in state-of-the-art manufacturing equipment and placed that machinery inside Foxconn and other supplier plants, then taught people how to run it. Suppliers accepted thin margins and heavy risk, contracts with low prices, stringent warranty obligations, and the burden of repairing or replacing returned devices at their own cost. In the short term, that squeezed supplier profits. Foxconn's margins, for example, contracted markedly after winning Apple business. But the trade-off was knowledge, scale, and capacity. Suppliers learned rapid, high-volume assembly and advanced manufacturing techniques. That combination, equipment, engineering, volume, let Apple build one of the fastest, most efficient supply chains the world has ever seen. Consider the iPod. By 2005, Apple was selling around 22.5 million iPods in a single year, a leap from under a million in 2003. That scale required the massive, fast assembly Foxconn and others had come to master. China's government welcomed those investments, and it had a longer game. Letting a powerful foreign firm scale inside China created a pressure cooker for domestic capabilities. There's a famous analogy often used to explain the strategy, the catfish story. Drop a catfish into a sardine tank, and the sardines keep active on the long trip to market. Similarly, bringing a top foreign competitor into a market jolts local firms to improve. Apple's presence energized Chinese electronics manufacturing and helped create homegrown champions, companies like Huawei, Xiaomi, and others, that later rose using the factories, talented engineers, and know-how that had developed in Apple's orbit. By 2012, Apple's revenue in China had soared, reported at about $23.8 billion in that year, compared with under $1 billion in 2008. And China had become Apple's second-largest market. Apple seemed to be in command, but after 2013, this relationship began to strain. Under President Xi Jinping, China grew more assertive economically and politically. State media launched campaigns portraying Apple as arrogant and unfair to Chinese consumers, accusing the company of offering different warranty terms or service standards in China than elsewhere. The criticism was not merely commercial, it became political, and the message from Beijing was clear. Success here is a privilege that can be revoked. Faced with mounting pressure, Tim Cook did something unusual. He publicly apologized in Chinese on Apple's China website, acknowledging concerns and pledging better service. Behind the scenes, the response went further. Reporting shows that in 2016, Tim Cook traveled to Beijing and engaged with Chinese officials. Subsequent accounts describe commitments from Apple to increase investment in China, to buy more components locally, to expand training, and to collaborate with Chinese universities and tech companies. Some investigative reports summarize these commitments with a remarkably large 5-year figure, about $275 billion, and noted Apple's $1 billion investment in Didi in May 2016 as one visible sign of the company's outreach. Those reports are grounded in investigative journalism and internal documents. Apple's public statements describe expanded investment and partnerships, but do not always provide identical numeric summaries. Over time, China learned the lessons Apple taught and then moved beyond them in many areas. The supply chain Apple had built in China became hard to replicate quickly elsewhere. Even as Apple began to diversify some production to India and Vietnam, most of Apple's key suppliers and manufacturing capacity remain rooted in China. A large share of Apple's top suppliers have production facilities in China, and estimates show a significant majority of Apple's manufacturing footprint and component sourcing still tied to the country. Analysts warn that shifting all production rapidly, especially back to the United States, would be expensive. Some reports suggest a hypothetical fully US-made iPhone could cost several times more than today's price, with estimates that have been floated near $3,500 per device in extreme scenarios. The economic reality is stark. Apple's operating model and global price points have been built around the efficiencies China enabled. So the relationship has become a geopolitical trap. Apple is an American icon, valued in the trillions and central to U.S. capital markets, and yet it depends heavily on China for manufacturing, for key suppliers, and for a large portion of its revenue. That dependence creates strategic vulnerability. In the United States, there are growing calls from policymakers and in Congress for Apple to reduce reliance on Chinese manufacturing to protect national interests. At the same time, China has its own incentives and levers. It benefited enormously from Apple's presence and investment, and once the domestic industrial base matured, China could, and at times did, press Apple politically. The paradox is striking. Apple helped build the manufacturing, human capital, and technological foundations that accelerated China's rise in electronics. In turn, China helped make Apple the scalable global brand it became. The phrase, "Apple made China and China made Apple," captures a mutual, messy co-development. Each shaped the other's destiny, and each now represents a source of risk for the other. Is the phrase fair? There's no simple yes or no. Apple undeniably invested billions, transferred expertise, and trained millions, transforming supply chains and skills across China. China, through policy, infrastructure, and a huge workforce, enabled Apple's dramatic growth and supplied the scale that made Apple a dominant global brand.
Today, the relationship is both achievement and dilemma. The same forces that created Apple's success are now part of a geopolitical web from which there is no quick escape. What do you think? Was Apple the architect of China's industrial rise, or was China the engine that made Apple the giant it is today? Or is the truth somewhere in the middle? Leave your thoughts below.